Hey traders, right, we're going to take a look at sterling now, cable, and we're going to do some basic top-down analysis because this is one of the key questions I get asked. How do you do top-down analysis? And I'm just going to run you through a simple process that we do here at Trade and Train. Remember, the first things that you've got to think about when it comes to trend analysis is how do you define a trend? So, simple way of defining an uptrend is if the market is producing higher highs and higher lows, you have an uptrend. If the market is producing lower lows and lower highs, you have a downtrend. Now, within these periods of trend on the time frame you're looking at, there will be periods of consolidation, there will be periods of downtrend, and there will be periods of breakout. This is what technical analysis is about. And if we were to look at the monthly period here, what looks like consolidation, okay, there's going to be periods of uptrend, periods of downtrend, uptrend, downtrend, uptrend, downtrend, but all on different time frames. So when we look at this on this time frame, it's consolidation, there's no trend. But on other time frames, you will see clear cyclical patterns and easy trading opportunities, but this is the art of top-down analysis. So let me just remove all of these drawing tools right now, and we'll start from scratch. So if we're going to look at this particular market, if we were to work our way backwards, so here's the first high we can see. Now if we then want to look and say, right, well, there's the low. So let me just undo that. That was a bit of a squiggle. There's the next low. So what we're looking for is the market to either break this high up at the top or break this low to confirm. So here we have a lower high. Okay, how do you know that? Because the market rallies, and then I look at a simple candle count of 2 lower lows, and we see 2 lower lows in candles without producing a higher high. That tells me this is a lower high that has been formed. So now what I'm looking for is either a break of this low or a break of this high. The market comes down, you can see we get a little pullback, but we don't get too high a high, so this isn't a low. And the same again here, and there's our next low. So now if we look at this market, we've got a high, a low, or I should say a lower low, a lower high. So in theory, we're now talking downtrend on this particular market. Then we get a higher low. We look at this, we get a lower high, and then we get a higher low, lower high in here, same level, lower low. So if we look at this, this is all consolidation. The market is narrowing, i.e. there's no trend on the monthly. But then we get a lower low. This is potential warning now that the market is about to break to the downside, and we're looking for a lower high, or at least a rejection of this level. And look what happens, it comes straight back up into this zone here. So we've now got a higher high on the monthly, but in the broad scheme of things, the market, we've not seen it break this high until this point. This proves to be a false break, so we're looking to see what happens. The market now comes down, creates a new low and a lower high. So from this point here, we're now looking for short trades on the weekly or the daily, okay, because this is confirmed on the monthly. It's broken the low, we get a pullback. Okay, this is Brexit, but look, it pulls back into structure. We now get our opportunity, and it forms a lower low. We're having our correction after the impulse movement down. We get our lower high, and this market is in impulse move right now on the monthly. So I'm just going to remove all those now because my chart's looking a little bit messy. So if I was just to mark on a couple of key levels here on cable right now. So effectively, these are the next sort of support and resistance zones that I'll be looking for. Why? Well, basically, if it breaks this blue line here on the monthly, that means we have a new high, and if it breaks this blue line here, we're going to have a new low. So this will, if obviously the preferred option would be to continue to the downside. Why? because then we're not having to wait for the new trend to form. So if it creates a new high, then we're going to have to wait for a pullback for a higher low. Now, if this is the case, that doesn't matter, because then what we do is we trade smaller time frames. We look down. So essentially the bias remains short. So we drop to the weekly chart and have a look to see what the current state of play is. So the weekly chart, what do we see? We see double top, neckline, lower low, lower high, lower low, potentially forming the new lower high. So what we're looking in for here now is for this market to continue its downward trajectory to at least equal these lows down here. So how can we look at doing this? Well, again, this comes down to, let's look at the time frames, let's look at technicals, see if there's anything in here. So you might have a short-term trend line drawn like this. You'd be looking at structure points. Well, there is no horizontals in here at this present moment. If you were looking at fibs, you know, we go from cycle low. You can see right now we're pretty much just pushed that up into the high. Okay, you can see we're potentially rejecting this 50% retracement of the weekly impulse move down. So we're in an interesting area right now. So the weekly shows, I'm just going to mark it on in a different color. Let's mark the weekly highs and lows on in red. And I'll just copy it so they're all the same length. So there's the high, and now we're looking for the low. So you can see how we've got a few more cycles on the weekly than we do on the monthly, but we still have that movement. If I just draw the movement in, so this is the weekly trend. You see how the market was moving up, we get a double top, it comes down, we get a lower high after a lower low, another lower low, and we're now looking for that next lower high to trade it back into support. So let's drop down to the daily. Let's see what technicals we can see right now. So here we go. High, low, lower high, lower low, lower high, lower low, and we're still forming this tweezer tops, 2 pin bar count. Remember, today is still a live candle, so we've only got yesterday's to go from, and today is the vote on sterling. So technically you could have a sell stop underneath yesterday's candle and target these lows here, which I know some of our traders have got on at slightly reduced risk, obviously, because with the political sort of stance with Brexit, it does make it a riskier trade in the sense that we could see some hugely volatile swings. But if you're trading with trend and technicals, you know, you can ignore the news, so to speak, and just stick to your rules. And there's a trade basically on that targeting at least a 3-to-1. So it was a very brief and simple breakdown of how you can look at trend, support and resistance, or supply and demand, however you prefer to call it, and then trying to trade accordingly to a simple set of rules. If you'd like to know a little bit more about trading and putting together a consistent process in how to create consistent results, then head over to our website www.tradeandtrain.com. If you like the information sent out today, please hit the like button and share it with any fellow traders. If you've got any questions, please put those in the comment section below. Thank you.